welcome to the CNBC-TV18 Mumbai studio. I'm Ekta Batra. You're watching Your Stocks this afternoon. Well, it's turning out to be a session which is quite quiet, you'd have to say. So there is a recovery which has really taken place for the bank nifty at this point in time. So up around 197 odd points, up around half odd percent there. And the mid-cap index, which is up around 200 odd points as well and sustaining at those levels. The advanced decline ratio has been positive. So around 2,300 stocks advancing to around 1,570 stocks declining. So that's held steady for most of the day. 2:1 is where it's at. Overall, markets looking good at this point in time. So we have a lot of queries to go through in terms of retail investors. We have Shahina Mukadam, who's an independent market expert, joining in to discuss the fundamentals. Vaishali Parekh, who's the head of tech research at Prabhudas, Lilladher, to answer all of your tech questions. Afternoon, ladies. It's an all-ladies show, so good to see that. Well, Vaishali, before we kick off the show and get, talking about a couple of those queries, just wanted your sense in terms of the texture of the market and the fact that the advanced decline ratio has been quite steady through the week.
Very good afternoon and thanks for having me on the show. Yes, we witnessed a new high in Nifty and we are sustaining well above 22,500 levels. So, well, that's a positive sign, but well, we are going to see some whipsaws too. So we still maintain a positive bias now with 22,250 as our support, and we would be looking at a target of 22,800. Now, Bank Nifty, if we talk about, well, after a very long time, we saw yesterday, it was for so many days just consolidating and refusing to move past 47,700 levels. But yesterday we saw a gap up opening and sustaining well above it. So thanks to HDFC Bank, and today also we are seeing some trigger coming in above 48,300 would call for further positive move going towards 48,500 to 49,000 in days to come. And today we are seeing good up move coming in Kotak Bank. So yes, along with HDFC, there is participation with from Kotak also. So view overall is a positive bias.
Okay, all right. Well, let's get those queries in now. The first question we have is Madhvi, who writes to us from Visakhapatnam. She holds 50 shares of Tata Motors, which she's bought at around 289 rupees. So she's sitting on a good gain there. She wants to know what the future prospects of her investments are. Well, currently she's sitting on a good amount of gains when it comes to TAMO. Shahina, what would you recommend in terms of the fundamentals? Would it be sticking on with this investment or maybe taking some profits?
I would suggest she continues to hold. She's gotten at a very good price. So if you're getting at a good price in a good long-term investing portfolio type of stock, it's better to continue to hold. And especially when fundamentals are also actually doing well. If you see JLR, they're doing pretty well, 10% type of volume growth. So this is enabling the overall company to gain market share. Also, we've, the management has put out that there is the demerger between the passenger vehicle and the CV vehicle, businesses into two listed entities. So that it gives you an additional opportunity. So I suggest she continues to hold and, wait for all this restructuring to happen. I think she will, on a consolidated basis, make money in the medium term, even from here. So it is better to, continue to hold on this investment.
Okay, all right, fair enough. So that's on Tata Motors. Technically, Vaishali, what's your recommendation on TAMO?
So I would say yes, technically also it matches the fundamental view what Shahina just said. So of course, but for a disciplined, even for holding, she can just keep a stop loss of 970, because if it goes below that, then we may see further selling pressure coming in towards 920. But the upside projected targets do come to 1100 to 1200 for the near-term basis. So it is a hold with strict stop loss.
Okay, well, let's get in another query now. We have Yoga Rani, who writes to us from Tamil Nadu, who holds 6,000 shares of IDFC First Bank, which is bought at around 85 odd rupees, asking if one should book their losses or buy some other profitable stock instead of this particular counter. Sitting on a loss at this point in time for IDFC First Bank, but do you think that it could probably recover to the buy price at least of 85? So maybe there could be a break even, Vaishali?
I would say technically it's very well placed. In fact, we are recommending to buy at these levels because I think once again the risk reward ratio is very favorable. The long term trend is intact. We've seen it consolidating, and IDFC First Bank has been a laggard so far. So 75 is acting as a good base, and I think it's a matter of time. This should move past 83 to 88 levels. I would say average out at these levels.
Okay, average out at these levels. And fundamentally, what would you recommend on this one, Shahina?
I would agree. The stock corrected because some large investors in the last couple of weeks sold some quantity of quite a large quantity of stock. But now the stock is recovering, and I believe that if you look at pure fundamentals valuations at 2 times price to book, the profits are growing about over the next 2 years will grow about 25%. So therefore, and the asset quality is improving. Balance sheet is improving. Net NPAs are now just around 0.7. So I would suggest she continues holding, maybe review after about 6 months to a year.
Okay, all right. So that's on IDFC First Bank. Review after 6 months to a year. You can continue holding as of now. Nagesh Havaldar writes to us from Bangalore, holds 35 shares of Sun Pharma, which is bought at around 955 odd rupees. So sitting on a profit there. And 30 shares of Apollo Tubes, which is bought at around 1000 or 10 rupees. He's a long-term investor and wants to know what to do, whether he can hold these two particular stocks or he should probably book his profits on them. So as of now, in the money, do you recommend to probably build on to this gain or maybe cash out? Vaishali.
So I would say, well, Sun Pharma, in fact, from in the morning, we saw a good pickup coming in pharma sector. So there could be some consolidation coming in, but well, pharma sector on the whole is looking quite promising. Even now, we still see some further upside from here on. So Sun Pharma being the leader, I think this can go towards 1680 to 1700 levels. I think that is a level where profit booking can be done because yes, it's quite overstretched and it's quite overbought. So yes, 1700 would be the level that one can look for booking profit. And as far as APL Apollo, you said, right? Apollo Tubes. So I think there is still scope of a lot of upside. So remain invested in this. And I think because it is getting into a trend. So once we see a clarity of this stock sustaining above 1580, 1590 levels, I think it's ready to go towards 1750, 1800. So this is a hold for now.
Okay, all right. And would you have a view, Shahina, on both these stocks?
See, APL Apollo, I would believe that it is better to book some profits. It's a good company, no doubt, the largest in spectral pipe business. But at the same time, if you see the performance, it is actually, the growth is actually coming off a bit. And secondly, raw material prices are going up. And thirdly, the valuations are extremely expensive. If you see the stock, it has given multiple time return in the last 3-4 years. And at these levels, if you see the valuations, both on a EV by EBITDA basis, on a PE basis, it's extremely aggressive at current levels. So I think if you're holding for a year or so, I think it will consolidate at current levels. So I would suggest you could switch from APL Apollo. In terms of Sun Pharma, I would believe that one can continue holding. Yeah, it is not cheap at 30 times P multiple 1 year forward. It's not cheap. At the same time, you have the possible, Taro is doing well. At the same time, you have the possible monetization of some of those assets of Taro. So I think to that extent, valuation will start looking more attractive. And of course, they've got a deep pipeline of products that are ready to be launched, both in the developed markets as well as in India. So I think Sun Pharma, you can continue to hold.
Okay, all right. Sun Pharma, you can continue to hold, and maybe it is the specialty business, which will be the real kicker come this quarter, maybe even Revlimid generic, which could contribute to sales. So that would be something that the street would watch out for. Kunal Mehra writes to us from New Delhi. He holds 100 shares of NTPC, which is bought at around 300 odd rupees. So he's sitting on a profit on that one. And he wants to know whether to hold or sell this particular counter. He's sitting on a profit for NTPC. Buy price is around 300 odd rupees. So what would you recommend on this one, Shahina?
Continue to hold. Valuations are not too stretched. It's about 1.8 times current year price to book. And of course, they've got a lot of capacity addition, both in renewable as well as in coal-based power plants. So I think you should continue to hold.
Okay. All right. And Vaishali, would you have a recommendation on NTPC?
I would say yes, continue holding, because even on a weekly chart, I'm looking, it's ready for a new price. So I think about 360, it could go to 380, 400 levels. So yes, continue holding the stock.
Okay, all right. Well, we need to take a short break. More queries, stay tuned. Welcome back. You're still tuned into Your Stocks. Well, it's turning out to be a session which is extremely quiet at this point in time, but there are a lot of specific stocks which are buzzing. So from the broader markets, there are a lot of stocks which are showing good amount of volume and price action at this point in time. Just want to point out something like an IREDA, which has jumped around 11.5% huge amount of volumes traded on that one. It's been a fantastic year for IREDA already. It's up around 70% and it's gained around 30% this week itself. So good going on that one. IRB Infra also joining the list. That stock is up around 6.5%, is rallied around 62% this year. Just want to point out that even NBCC is doing well, so up 6.5% for that particular stock, gained 65% year to date. So remember that all of these stocks which seem to have already gained a lot in terms of strength are adding on and building on in terms of gains at this point in time. In fact, Vaishali, just wanted your thoughts on a couple of these counters, because IREDA, NBCC, a couple of others such as IRB Infra, they've already done well this year. But there seems to be much more in terms of gains coming through now. Would you be a buyer for a couple of these stocks on a trend or a technical basis where the momentum already seems to be in place?
So let's start with IREDA. But yes, of course, I don't have much of data because it's a new listing. But yes, the trend so far, what I'm seeing is really very good. And we did get a buying opportunity just some time back when it made a low of around 120. But even now, I think one can start accumulating, because the way I'm seeing the further price projections, it's ready for a target of 200, 220 to start with. So I think keeping 150, 145, 150 as a support band, one can start accumulating IREDA. As far as NBCC is concerned, yes, NBCC also is already in the momentum. One can definitely get into the stock with the stop loss of 120, because the long-term charts, what we are looking at a target of around 150 to 160 from here on. So that's about NBCC. What was the third stock that you asked me?
IRB Infra, IREDA and NBCC.
Yes, so IRB Infra, yes, we have seen good returns so far coming in, but yes, there is still further scope of this going towards 70, 73. So I would take it as a trading bet.
Okay, all right, fair enough. Let's in fact now get in another question. We have Vishal, who writes to us from Mumbai. He holds 200 shares of Sonata Software, which he's bought at an average price of around 550 odd rupees, and 75 shares of Apollo Hospitals, which is bought at around 5,450. So he wants to know what to do, whether he should hold or sell these particular counters. So Shahina, coming to you on this one, Apollo Hospitals is the first query, and the other question is on Sonata Software.
See, Apollo Hospital, in fact, I think, it'll be wise for the investor to take part profits off the table, book, his profits partly for both the stocks. First, Apollo Hospitals, yeah, the balance sheet is improving. They've reduced the debt through fundraising. At the same time, I think, the recent Supreme Court directive to the government to have standardized rates for hospitals. I think there's no clarity as to what is the outcome of this on the numbers or what on the profitability or what is going to happen exactly over the medium term. So I see this as a negative headwind. So I would book my part profits in Apollo Hospitals for now. As far as Sonata goes, last 2 years they have issued bonuses every year. So basically, while they have now become $1 billion turnover company, which is a great achievement for Sonata, at the same time, if you look at the equity has gone up substantially, making the stock look expensive for a medium-term investor. So I would say if your holding period is about a year or year and a half, the valuations are so expensive at current levels, taking the latest diluted equity, that it will be better to at least part book profits.
Okay, and about the technicals on these two counters, Vaishali?
Yes, so I have been tracking Sonata software. I think, there is consolidation going on, but yet I would say let's wait it out, because I think keep 700 as a stop loss. And once if we see the stock going above 800, I think it's ready for another target of 860, 880. So I would wait it out. Of course, if 700 levels break, then it would negate my view. So for now, it's hold. And as far as Apollo Hospital is concerned, the trend is pretty okay. I mean, one needs to keep a stop loss, and the stop loss comes at around 6,300. But if this stock moves past 65, 6,600, I think this is ready for a target of 68 to 7,000. So for now, technically, it doesn't show any weakness in both these stocks.
Okay, so there could be a target of 6,800 to 7,000 on Apollo Hospitals as well. That's the view coming in on the technicals. Just want to point out that a couple of these hospitals are in fact a bit sluggish at this point. Max Healthcare, for example, is down around 2% We have Narayana Health also, which is down around 0.7%. So maybe there is some amount of trepidation ahead of that court hearing on the 10th of April with regards to standardization of rates. So I think that would be extremely crucial to watch out for in terms of an event for that entire space. Well, otherwise, for the markets holding steady, no complaints coming in. A couple of these stocks such as IIFL Finance has also spiked up. In fact, that stock has gained around 13% at this point in time. So it's showing some good amount of gains. On the downside, Z Entertainment, it's had a good week, you'd have to say. It's up around 9%. Remember, it's still down over 40% year to date. So it's a bit sluggish today, down around 0.6%. Prestige also gained around 10% this week, is down around 0.6% at this point in time. Well, let's get in Prabha Gupta, who writes to us from Hyderabad. She holds 50 shares of JSW Steel, which she's bought at around 800 odd rupees. So she's sitting on a profit. She's asking whether to hold or to sell at these current levels. Well, Shahina, what's your recommendation on JSW Steel?
I feel it will consolidate for some time, but at the same time, I can continue to hold if you're already invested in it. Because valuations are, while of course it's like the stock has moved up, it's still about 6 times EV by EBITDA 1 year forward. And if you also look at their price to book is about 2 times. So valuations are not that expensive. At the same time, raw material costs in terms of iron ore is coming down or has come down over the last 1 year. So I think one can continue to hold as of now.
Okay, and Vaishali, what about you?
So I would say actually metal sector on the whole has been looking very good. And talking about JSW Steel, it's already in a trend. So 900 acts as a near-term hurdle. But if 900 is taken care of, I think we have further projected target of around 980. So I would say definitely hold with a stop loss of 820.
Okay, hold with a stop loss of 820. Ram writes to us from Chennai, holds 100 shares of ITC, which is bought at around 411. So he's a short-term investor and wants to know what to do with his current investment. He's not, and whether he can probably even hold the stock for longer. Well, short-term investor, Vaishali, ITC?
So for short-term, well, we have just seen a very strong candle happening today, and the volume is decent. So I think for short-term perspective, 440, 445 would act as a tough resistance. If he's ready to hold for longer, and if we see the stock moving above 450, it's ready for 480, 490. So he can make his views accordingly.
Okay, all right. And on the fundamentals, Shahina on ITC?
Well, valuations remain very attractive. 1 year forward, 20 times P. The brands are very strong. I mean, across the board, various sectors. The hotel business is to be demerged, listed. A lot of positives. So I would suggest to continue to hold.
Okay, all right. That's on ITC. Remember that the high or the 52-week high for that particular counter stood at almost 500 odd rupees. So there's been a correction on that front, but nonetheless, it still rallied very significantly, especially last year, where it rallied from levels, 52-week low stood at around 384 rupees for that particular counter. Well, let's get in another question then. Debraj writes to us from Bangalore, holds 4,000 shares of Rajratan Global Wires. Since Jan of 2021, purchase price was around 103 odd rupees, so sitting on a massive gain there. Wants to know what to do, whether to continue holding the stock or to book his profits when it comes to Rajratan Wires. Well, interesting one there, considering that, it was bought at a very good price. It's corrected significantly from its 52-week high of over 900 odd rupees. So there's definitely, some correction which has taken place there. So it's a difficult decision in that context then. Shahina, what would you recommend?
I would recommend even at current levels to sell, book your profits. It's gone up 6 times in the last 3 years. And if you look at it in terms of, the actual revenue slowed, there is some bit of slowdown that they're seeing. I think they supply to tires. So to that extent, some slowdown is coming in terms of revenue. And I think valuation is also extremely expensive at current levels. It's a small cap. It's just 3,000 crores type of market cap. So I would take this opportunity to switch.
Okay, all right. And Vaishali, what would you recommend on a stock like this? Do you think that it could probably return to those levels of over 900? Like Shahina mentioned, it is a small cap stock. There have been a lot of cautionary statements which have come out within that space. In that context, how would you approach it?
Technically, I would say it's bouncing back from the oversold zone. So I think wait for a while, because keep 620, 615 as stop loss. And I think wait for a bounce. If one has to exit, at least wait till 750, because if the stock continues to show strength the way it looks right now, with 615 as stop loss, I think it's worth holding. You can get a better price at 750.
Okay. All right. So maybe there is some upside technically on Rajratan Wires. Mayank writes to us from New Delhi, wants to buy some shares of M&M, asking if he should buy it or not. He's a professional. Well, is that a good buy at these levels, Vaishali, technically?
Technically, I think it's really run up, but wait for a decline, because we have seen good run up coming right from around 1600 levels, and right now it's 2000. So the ideal level one may consider is at around 1800 levels.
Okay. All right. And what about you, Shahina? What would your recommendation be on M&M?
Yeah, I would agree. It's better to buy it on dips to get a decent return from here on, given that tractor sales have not been that exciting. And I think while monsoons are expected to be, decent and in line, but I think one should wait and buy it at dips.
Okay, all right, Shahina, as well as Vaishali, thank you very much for joining in and taking us through all of those queries. Well, for the markets, it's quiet in terms of the frontline indices, but definitely doing better for the mid-caps as well as for the bank nifty. That's all the time that we have on the show. Do remember to email us your questions. We'll address them with our experts. Stay tuned, closing bell, to take you through the last hour of the trade for the week.